Hello, everyone. Today on the Final Bar, it's Wednesday, February 8th. We'll be talking with Joe Rabil of Rabil Stock Research. We'll see what charts are top of mind for him, a really interesting breadth indicator that really drives home the influx of demand for stocks. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the power of StockCharts. StockCharts was designed with three pillars in mind: excellent tools, expert commentary, and investor education. And we find all three of those are really important aspects to what you do. And I bet if you think about how you spend your time as an investor, there's probably one or two of those that you cover pretty well. Maybe you have a really fantastic toolkit like the tools we offer on StockCharts. Maybe you follow expert commentary pretty closely, but the educational component, maybe you need to make more time to sort of improve your understanding of the markets and your command of the technical toolkit. We hope you can find a home for all three of those uses of your time and expertise, or time and effort, on the StockCharts platform. Interesting day here overall, sort of a risk-off feel yesterday on Tuesday's session, the 7th, sort of a move to new highs in the going into the close. Today, the opposite, right? We're sort of drifting lower through the course of the day. Didn't really find a floor even into the close. So we'll have to look at some of those charts and see how we relate the short term of a day like today with the long term, right? What have we learned today? What can that tell us about this configuration of these markets going forward? Let's get right into our market recap. We'll talk about the major averages here quickly. The S&P 500 down 1.1% to just under 4118. The NASDAQ composite underperforming the S&P today, down about 1.7%. Mid caps and small caps all down about 1.2 to 1.5% today. The VIX almost getting back above 20, and that 20 level I feel like we keep talking about, right? We sort of are experiencing this rally phase where the market's moving higher on lower volatility. And that is a very different look than we've seen in quite some time, right? Since the October low, you've had this rally, but the volatility really hasn't come down to the level we saw in 2021, for example. Today, the VIX moving back higher, up about a full point to almost getting to 20. And again, not that the VIX is a perfect timing system, but if the VIX gets back above 20 as we go in pullback mode, that's when the question marks probably start to pop up in my head as I'm looking at some of these charts that have had really good runs, some of these names that have become overbought over the last week or two after running so beautifully in the new year. So more to come. We'll look at some of those individual names here today, and especially with our guest, Joe Rabil, who brought a couple stocks that I think will be really helpful to review together. Interest rates, sort of a mixed results in the fixed income space. Some parts of the curve higher, some lower. The 10-year yield, which is the main benchmark we tend to follow for interest rates, down a bit to 365. Bond prices moving higher. The TLT, which is a pretty liquid bond ETF, is up about 0.5% today. No big change in the dollar index, to be honest with you. Commodities a little mixed as well. Gold and silver prices both higher. The GLD was up about 0.25%. Silver up about 0.5%. Copper prices moving lower. And getting to cryptos, almost all in the red here, right? You have Bitcoin down off of that 23,000 level. We actually got above 23,000 yesterday, reaching all the way to 23,400. Now coming back below 23K today. Ether prices down about 1.6%. Just like equities in a risk-off sort of phase through the course of the day. Same for cryptocurrencies, really moving lower going into the equity close sort of time of day. Let's look at the daily S&P 500 chart. We'll look at what happened. And again, the goal with the Final Bar, as with, I think, a lot of technical analysis, and in my opinion, should be connecting timeframes. And our guest today, Joe Rabil, literally wrote the book, wrote certainly a really, really well done book on multiple timeframes. And I think that idea of thinking about short-term to long-term is really helpful when you focus on charts. It's one of the great advantages of technical analysis is you're not really locked into one particular time frame. And arguably, a lot of the technical toolkit is fractal, what we say, right? Which means patterns that work in the short term tend to work in the long term, right? So breakouts and breakdowns, moving average analysis, indicators like RSI and others are really scalable on time frames. So it can tell you a little bit about minute-to-minute movements and month-to-month movements and everything in between. So having said that, you have a down day today, right? You have the market moving lower, still above 4,100. And I tend to think of market analysis, particularly the big picture environment, in terms of what I call lines in the sand, right? What is the primary trend? What's the overall trend that you think is the main trend at work in the markets based on your time frame? And then how do you see the short-term fluctuations and how they relate to that overall trend? My conversation yesterday with Ari Wald of Oppenheimer was a really fun one. We talked about that change of, I think, mentality where I think a lot of investors either have come to or probably should get to, which is the difference from most of 2022, which was a sell strength type of market, right? A primary downtrend, and you're seeing these cyclical rotations within the downtrend versus what we've seen since the October low, which is more of a primary uptrend, particularly in the new year, where you're seeing the S&P make new swing highs. You're seeing a lot of individual stocks break above their highs from December or even from August. You're seeing a lot of stocks, most stocks, in fact, in the S&P 500 above their 200-day moving average. And so now it's in Ari's opinion yesterday, more of a buy the weakness as opposed to sell the strength. And this is a time to recognize that pullbacks are now within the context of a longer term uptrend. Now that works as long as you hold key levels of support. So for me, it's all about what level, right? Instead of paying really close attention to every little move that happens during the course of the day, pick a level, set an alert, and then just don't worry about it until that level is triggered. Then you need to reevaluate it. For me, one of those levels, certainly in the short term, 4,100, right? As long as the S&P remains above 4,100, no matter how noisy a day is or a week is, as long as you remain above that level, it's a pretty solid market because we just broke above those November and December highs right at 4,100. That's the top of this blue shaded area on my chart here. Worth noting, about a week and a half ago, the S&P touched the overbought level for the first time since the August peak. We're now sort of chopping around. We stalled out from that moment, but at this point, remaining above 4,100. If we go lower, the level we talked about with areas around 3,950, that's the 200-day moving average. There's plenty of space for stocks to pull back a bit and still be within this context of an uptrend. And I think the reason why that's true is because of what Charles Dow, really envisioned over 100 years ago, which was an uptrend. Is by definition when the chart is making higher highs and higher lows. That's the trend we've seen, certainly since November and December when we made a higher low there. We've now made a new swing high. Higher highs, higher lows is an uptrend, and that's what we're seeing with stocks. So could be a bit of a pullback mode here today. It's actually a bearish Harami pattern. If you want to dig into your candle pattern library, look that one up. That's basically sort of a reverse of a bullish engulfing or a bearish engulfing pattern. You have an up day and then a down day. The first day is actually wider than the second day, or it's a bearish inside day if you're familiar with bar charts. Looking at sectors, there was a little bit of movement here going into the close. Healthcare was at the top of the list. Real estate appears to have just edged it out. We're always at the close, sort of locking in all the closing data and going through and updating our databases. So at this point, it looks like real estate and healthcare at the top of the list. All 11 S&P sectors in the red today, but those two weren't too far off from being positive. Financials and industrials almost neck and neck for the third place finish today. When I was scanning for stocks making new 13-week highs earlier today, found a whole cluster of them in the financial sector for sure, as well as a handful in industrials, things like XPO, some of the airlines making new swing highs, some of the waste companies like Clean Harbors, CLH, and others actually starting to continue their previous uptrends. On the bottom of the list, you have communication services. Now, that's an interesting data point because that has been really the strength in the new year, right? Those sectors like tech and communication services, which were so underperforming through most of 2022, really starting to emerge in a position of strength in the fourth quarter and following through to the upside in the new year. You can see the XLC actually gapped higher about a week ago, right? Gapping above 58. From there, we've come right back down. That might be actually an interesting thing to follow. When you think of the chart of Meta, which I know we'll talk about here with Joe Rabil in a few minutes. Meta and other stocks like that have had gaps recently. And anytime there's a gap like that, my question is, do we hold the upper end of the gap, right? Because once you gap higher, I think one of two things, generally speaking, can happen. Either that's the beginning of something really cool, which you might call a breakaway gap. where you gap higher, and then that is a signal to a lot of investors that have been waiting that it's now a long and strong, all clear, let's get long and ride this thing higher. The other thing that can happen is it ends up being more of what you call an exhaustion gap, which is that after a big move, you gap higher, and all of a sudden, everyone that had an opportunity to sell out at 60 is super excited to do it, and all of a sudden, there's no more demand to push the price higher. So if we hold the upper end of that gap, that can be pretty interesting. Now, the XLC is actually trading down to the lower end of the gap, around $56. So my question would be, are we able to hold that level as we come back? Just to finish up here, a lot of earnings happening, a lot of names, way more than we can get to in a 30-minute show, for example. But I would point out some of the names reporting after the close today, particularly Disney, Robinhood, other names like O'Reilly and others that have had some interesting moves recently. After hours is always pretty noisy, but certainly keep those on your list for the next day or two to see what sort of reaction we get and what sort of follow-through we might get after their earnings release. Let's take a quick commercial break. We'll be back with today's guest, Joe Rabil. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. We so appreciate you joining us every weekday after the close for our show. We have a lot of really good plans for the show, including our new studio. We're currently fine-tuning that. Hope to be back in there very, very soon and upgrading this show through the course of 2023 and beyond. A couple quick announcements before we bring on our guest today, Joe Rabil. First off, we welcome your questions. Julius DeCamper did a great job with the mailbag segments over the weekend. We're going to do another one this coming Friday. We'd love to feature one of your questions live on the air. Our email is thefinalbar@stockcharts.com. We're on Twitter @FinalBarSCTV, and we're on YouTube. Drop a comment below the video you're watching on our StockCharts YouTube channel. We'll hope to answer one of your questions live on the air on Friday's show. Go to StockChartsTV.com. We are so fortunate to have some really knowledgeable experts like Joe Rabil and Katie Stockton and Ari Wald and Jeff Hirsch and so many other bright minds focusing on the markets and sharing their words of wisdom. All of their interviews can be found for free at StockChartsTV.com or on your mobile device. Just search for StockCharts TV on demand. I want to welcome on today's guest, Joe Rabil. Joe's the president of Rabil Stock Research, coming to us from Fairfax, Virginia. Host of Stock Talk with Joe Rabil, which runs every Thursday at 2 p.m. Eastern. Joe, Happy New Year. Welcome to the show.
Thanks, Dave. Happy to be here.
Yeah, it's good to see you. Last time I saw you in person was at ChartCon, which brings back very, very positive memories of having you out to Redmond. It's good to get some of your takes on the market here in the new year. We're starting with an indicator that I'd not seen before, and you and I were talking about it before the show. Can you describe what this represents and what it tells you about the conditions here?
Right. So this is, I call it long-term positives, but I probably could have named it uptrends. I have an influence of Wyckoff. And so I wanted to go through, when I started my company, I wanted to go through each stock individually. And I like to call myself a bottom-up technician. And that means that going through the individual stocks and getting a feel for what that tells me is going to be more important than just looking at an index, even if I'm looking at it in 3 or 4 timeframes. So it just gives you a really good feel for what's taking place. What this chart shows is accumulation of what's happening week to week. I update them each week, and you can see the red circled areas going back to basically the 4 bear markets here and the bottoms. When we get down to about 20% of the stocks there's only 20% of the stocks in uptrends, you want to start looking for the stocks that are really turning their trends positive at that point. Because what I learned from William O'Neill years ago is that by the time we make a bear market low, the best stocks will be up 50% off their bottoms. And so that's kind of what this list is trying to show. What stocks are turning positive, in the group of 400 that I do over the weekend.
It reminds me a lot of the bullish percent index, which is or indexes, right, which are based on point and figure charts. But this is more of a subjective analysis, I would say, right, of you analyzing some of these patterns and seeing really what they represent, right?
Well, it is and it isn't. I found a way using moving averages to take price structure to a level where it can be a little bit more systematic, and then I add in a momentum component. I use MACD because that's the indicator that I've used the longest. And it adds, I think, something that can be a little bit more systematic. Now, there is a little bit of subjectivity to it, but for the most part, I try and make it as objective as possible. And if stocks are meeting certain criteria, it's gonna fall into that category. And the thing is that it's a checklist for me. So if I can't let my opinion override, if it's meeting the criteria, then it's in an uptrend.
Interesting. So what does it tell you now? We've obviously come off this low. This was down sort of in that September, October of last year. Now we're up to right about 50%. So as you're looking at this market environment, what does it tell you that now it's about 50-50, I think, between sort of positive and negative?
Yeah, and I think I've seen you mention this on a few different things on some of the composite indicators that you use, like the percent above the 50-day or the 200-day.
Sure.
The 50 mark, for whatever reason, is so valuable. And it doesn't show up as much on this, but it really is incredibly valuable. I have a short-term version of this, a short-term positives, and you can't believe how it bounces around the 50 line. So whenever we get to the 50 level on any of these indicators that I do, I'm always watching closely, especially with where the market is right now. So we could probably go on to the S&P chart, and I can show you why this all comes together right here.
Perfect. So this is your monthly chart on the left and then weekly chart of the S&P on the right.
Right. And on the right, I've got the downtrend line break, right? I mean, that is the world. Everyone in the world was drawing that trend line forever. And so, but for me, there's a couple other things going on. Number one, on the break of the trend line, we have made a higher high, but notice the MACD. Now, MACD is making a higher high versus its prior peak, but it is right at the zero line. It's sitting at the zero line. The signal line is still below zero. We don't really have a confirmation of a turn yet. And if you look at the green DI line, which represents the strength of the buyers, that has not gotten above 25 yet. So you could argue that this is just an ABC rally off the low. Even though we've broken the downtrend line, you could call it an ABC rally. And the reason why I would say that it's possible that that's what's going on is if we look at the monthly chart, we just rallied up to a declining 18-month line. Look at what happened a few months ago when we rallied up to that line. You see how that was the last peak in the market was right at that line. So anytime we have a declining line, flat to declining 18-month, I'm always watching to see the reaction. I don't think it's just going to blow through that line. But based on my work, my bottom-up work, I'm of the opinion that we're going to work through it.
Interesting. So maybe it could be one of those short-term pullback before a resumption of the uptrend kind of things. Now, what's interesting about this market now is you've had names like Meta. We were talking during the market recap about this name in particular gapping higher. We've had a number of gaps here around earnings in the last couple of weeks. What do you make of Meta? Is this the time to be getting in a name like this, or what does your toolkit tell you with such a rally off the lows?
No. So I viewed this as a really nice trading play. And whenever a stock gets stretched away from the 18-month and stretched away from the 18-week line, I start thinking I'm going down on a daily and an hourly, and I'm looking for a trade to the upside. I actually did an example of this on my Stock Talk show. But what I guess the point I'm trying to make here is that I don't follow a lot of noise out there. And but I did hear that some brokerage firms were starting to recommend some of these stocks. And I just thought it was worth bringing up because I just don't think it's the right thing to do, especially if you're a long-term investor. I mean, if you're a trader, because the short-term momentum is good, and we do have room up to probably maybe 210 or something like that before we hit real resistance, you could consider trading on a pullback up for another leg just because the momentum is good. But after that, I think it's going to start to get a lot more difficult to make money in this. And we have made a spike low, but I'm sort of expecting some kind of a ledge to form, sideways pattern. I think it's going to get a lot tougher to make money in a stock like this.
Yeah, and so many of these names have had incredible runs on percentage terms off the low, but still so far off of their all-time highs, right? At the same time. Your last one is in the industrial space, which is an area of the market that certainly has shown some strength at times. Owens Corning, an interesting setup with your weekly chart and daily chart. Can you talk us through this one?
Right. So, I mean, I wanted to draw in the trend lines to show the break of the downtrend line on the weekly, right? And then we came back and tested that support, right, the moving average support. And then we came back up and we just made a new high. So in, the trader Vic language, that's a 1, 2, 3 reversal, right? And so I like to think in those terms, but I also want to make sure that the momentum is confirming. And you can see that the MACD has crossed above the zero line. But the reason why I really wanted to bring this up is look at the ADX pattern. We have a 25 line going across there in gray. And for the most part, going back, almost a little over a year, all three of these ADX lines have been below 25. And if you go on the right and look at the daily chart, the ADX line has been below 25 for an extended period of time. So we're building up a lot of energy in 2 time frames. And if you notice on the ADX on the daily chart, it just crossed above 25, saying the momentum is starting to kick in. And you'll always, when we're looking at multiple time frames, the momentum will always kick on the smaller time frame first, and then we start to see it kicking on the bigger time frame. So it's just kind of attractive. And you can see this looks nothing like the market. That's really what I'm looking for, is something that bottomed way, way earlier than the market did.
Within industrials, you have a number of different areas, and if you don't, just because you host the show Stock Talk with Joe Rabil, I feel compelled to ask my own questions. I never get to ask questions in your mailbag. What about some of the airlines, things like Ryanair, Delta, right? Some of these have had some pretty interesting runs recently. Do you like an area like this, or is it too extended? And I think that's the concern a lot of people that I would talk to have is they've already had their runs potentially. Where do you come out on a name like this?
I don't like this one as much because you can see it's coming up on this big round number at 100, and that was the ledge breakdown. If you look at something like UAL, I'm kind of more attracted to a pattern like that, where it actually has the strong move with the ADX. Look at the ADX kicking into gear on the weekly chart. And now I'd like to see it consolidate a little bit more. We've broken the downtrend line. We've tested it. We've broken it. We've turned the trend here. I think there's more upside coming, but I'd like to see it pause a little bit longer. So I am attracted to some of these. Probably something like this or DAL would be my favorites.
What about the energy sector? I know a lot of people were bringing up the XLE here to start with. Energy was, certainly the story in the first half of 2022, one of the big ones. From there, all of a sudden, it's lightened up on a relative basis for sure, and a lot of the growth sectors have come up. But a lot of these names have stalled out, a lot of them. Some of them, like the EMP names, have really started to break down a little bit. Is this a time to layer into a sector like energy that's shown some short-term weakness, or do you find reasons to be concerned here?
I still think the long-term pattern is okay. Yeah. And for the XLE, I'm kind of looking at this 80 mark being pretty important. I think as long as it stays above 80, I think we're still okay. I'd categorize it as a correction. So as long as we're correcting, I don't really want to go diving in, because obviously this is a very volatile area. And if the index has a bad day, some of these stocks are going to be down twice as much as the index. So I'm looking for some sign that it's really stabilizing. So I'd categorize it long-term bullish, short to intermediate term, corrective pattern right now. Not anything I'd want to jump on right this second.
Joe, when I think about you, you remind me of a lot of the discussions we had with institutional analysts at my time at Fidelity. And it's probably one of the reasons why I enjoy talking to you so much, because there's very much a bottom-up process, right? Thinking about some individual names. But the reality is everything we just talked about is happening within the context of the Fed and inflation of all that. Can you just share words of wisdom? We have about a minute left. How do you navigate a period which in some ways is a very macro thing, right? When you're thinking about the Fed, thinking about rate hikes and all that, versus the bottom-up process of just looking for names and patterns that are working? How do you reconcile the two? And when you're thinking about interest rates, does this give you cause for optimism or pessimism, and why?
Well, I try and stay sector focused. And so that can help a lot in this type of environment. But the other thing I really try and do is I don't want to buy intermediate term overbought. Right. So if I'm looking at ideas for people, I just don't want to get caught in a situation where I'm chasing in this environment. It's not an all clear environment. If you're in a bull market, you can be kind of sloppy with your entries, on a longer term trade. But if you're going to do that in a bear market, you're going to, it's going to get really hard. You're going to get stopped out all the time. So I try and actually pay a little bit more attention to overbought, oversold. I use a RSI 5 on a weekly chart for, bigger trends, and RSI 5 on the S&P on a daily chart. And that really helps me stay out of trouble. If I'm going to do a trade, I don't want to buy when we're on a stem like that. So that's kind of how I get around that.
That's really, really helpful. And I love that thinking about it. It's funny, 2021 just feels incredibly positive relative to anything we've experienced recently. It's a distant memory. It's like life before COVID, right? But there are times when it's sort of a slow and steady bull market. I would agree. I don't think we're there yet, for sure. Joe, listen, it's awesome to see you. Thanks for coming on the show and going through all these charts with us. Be well and stay safe. We'll talk to you again soon, all right?
Thanks, Dave. Appreciate it.
That's Joe Rabil. Joe's the president of Rabil Stock Research, a longtime StockCharts contributor. It's been a really cool to have him hosting Stock Talk with Joe Rabil. It airs every Thursday, 2 p.m. Eastern. And it's really a Q&A designed show, which really differentiates it and really allows Joe to share some of his wisdom. If you look, a lot of the discussions we have, and certainly my approach, is not an indicator-heavy approach. I actually tend to not use so many technical indicators, which is why it's really helpful to talk to someone like Joe. It's really refreshing to see how he's using ACP to combine some of these different inputs, thinking about things like the ADX line and the MACD and whether they confirm or validate or do not validate some of the patterns we're seeing in price movements. Really cool comments there and great words of wisdom from Joe Rabil. We need to wrap the show, folks, and go to the 3 and 3. Let's talk about 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. We're going to look at Netflix. Netflix is another name within the communication services sector that has had a really good run. Part of me wants to be very bullish on a chart like Netflix because it just keeps working, right? A chart that keeps making higher highs and higher lows, by definition, is in an uptrend, right? That's what any of us that took the CMT exams or read books on technical analysis, that's one of the first lessons you learn is thinking about trends and thinking about what we're doing. Look at how Netflix has pulled back to its 50-day moving average and continues to resolve higher. The problem when you've had runs like this is you begin to become overbought. You start to reach price objectives, which you can measure based on the previous downtrend. And if you take that sell-off from fourth quarter of 21 to second quarter of 22, 38.2% of the way up is pretty much right where we stalled out about 2 weeks ago. So I'd be very interested in Netflix if and when it can get above that level. But I like thinking about how it tests resistance. As we've talked about, does it trade to resistance or trade through resistance? And does it demonstrate that there's more buying power besides just the momentum that got us to this level? I think that's still an open question mark on a chart like Netflix, although, fair point, it's had a pretty decent run so far. Chart number 2 is Bitcoin. I was talking with Dave Landry this week. We're talking about different cryptocurrencies, particularly some of the altcoins, right? Some of the less common of many. There are hundreds, if not thousands, of different cryptos to try to follow. But I was looking at Bitcoin back to 2014 and focusing on when the daily chart had become extremely overbought. And I actually did an RSI above 85. That's the pink horizontal line that you see here. And all of these purple vertical lines are indicating when Bitcoin has reached that 85 level on the daily RSI. A couple observations. Number one, this has rarely been the end of the move. Now, you've seen that sometimes, right? But most of the time when you've hit that level, you've usually made at least another high before it's kind of exhausted. But it also shows you how this usually happens within the upswings, right? So could this be the beginning of something? Potentially, but have we hit that point where you often get at least a brief pause in the trend? Absolutely, which means this sort of stalling pattern, but just below 23,000 makes a lot of sense when you look at history. The question is, do we resolve to the upside? And I don't think we've seen enough yet to make that declaration. Finally, I was looking earlier today at what I call the phenomena stocks, right? The FAANG stocks, but some of those other ones like Microsoft and Meta and NVIDIA and sort of those 8 key FAANG-like names in communication services, consumer discretionary, and technology. Google or Alphabet and one of the other names stalling out at the 200-day moving average, traded above it over the last 2 weeks and then traded back below it. Literally, Alphabet, in terms of the Class C share, closed the day right at $100 even, right to the penny. The question is it able to hold that big round number? That's a question mark for the chart of Alphabet, but pulling back after a stall above the 200-day moving average. Folks, that's a wrap for the show. I want to thank Joe Rabil of Rabil Stock Research joining us from Fairfax, Virginia. As a reminder, tomorrow I actually have Jesse Felder from the Felder Report, so don't miss tomorrow's show as well. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be well, stay safe. We'll see you tomorrow. Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.